We want to talk to you first about Reliance, a strong set of numbers, but markets are certainly not happy. What's your view on Reliance?
The results were better than expectations for us. We were expecting the GRMs to be around $10.5 per barrel, and they were at $10.8 per barrel. Even on the petrochemical side, we were expecting the EBIT in absolute terms to be flat on a sequential basis, but they were higher. So the operational performance was definitely ahead of what we were expecting, and in fact, their even interest cost has declined because the decline was higher than what we were expecting. So net overall performance was ahead of our expectations. Now the couple of announcements of the delay in a few of the projects and no clarity on when the Reliance Jio will be launched, while the management has said that in the next few months. So that has caused some concerns on the street, but we are not worried about any of those aspects because the only thing that happens is the growth and earnings get just postponed by a quarter or so when we factor in these delays, and over the next couple of years or 3 years we see strong growth from their core operations of refining and petrochemicals. So, and even looking at that, the telecom could be a drag, but overall profit growth should be strong. And in this light, the valuations don't factor in this kind of growth. So we expect the stock to re-rate, and we have kept a buy recommendation with a 1-year target of 1200 on the stock.
Okay, buy recommendation, 1-year target of 1200 rupees per share for Reliance. Prayesh, you mentioned about GRMs and a couple of other projects, wherein the announcement, of course, hasn't come in. For GRMs particularly, do you think this level of $10.8 a barrel, which the company has now achieved, it is sustainable? It's going to be sustainable going forward, given the volatility in the crude oil prices and the up move?
See, the GRMs can be sustainable because of a couple of points that I would like to highlight. The first one being the fact that Reliance's petcoke gasification project, as and when it commences operation, can bring significant delta to its earnings. And the second point is that the demand in the Asia Pacific region is still very strong for petroleum products, and particularly gasoline. The spreads have been pretty strong there, and the light side are still remaining strong. And if the economy recovers in countries like India and China over the next couple of years, the margins should sustain because the capacity additions will not be catching up pace. So in that sense, the demand-supply gap on the refining side should be favorable for GRMs over the medium term.
Okay. Can you also tell us what's your view as far as Cairn India is concerned and the numbers that the company has posted? The stock is down 3.17% right now.
The Cairn India results mainly impacted by the impairment loss, but overall otherwise the numbers were slightly better than what we were expecting. So it's Cairn India is no more a result story. It's more related to how the merger pans out, or how the crude oil prices move, and what happens to their extension of the contract. And these are more important points than rather than the results per se. So we currently have a reduced rating on the stock, and we'll review that post the management conference call today.
Okay. Any target for this one with reduced rating?
We had a 110 rupees target price earlier, but that was factoring in much lower crude oil prices. So now let's see. Post the management interaction, we will rework our estimates as well as our target price and recommendations.
All right, Prayesh. Thank you very much for joining us here on NDTV Profit and sharing with us your views on both Reliance as well as Cairn India.